The first day, the first show for the Indian equity markets was a super hit. The benchmark Nifty posted a very strong, high conviction, confident close, a gain of 268 points to finish at 17,677. Good evening, everyone. A very happy new year to every one of you. I know a couple of last few days I was not in a position to create my daily market takes. Apologies for that, but here I am, new year, the first day, and what a beautiful bumper move from the bulls. 3rd of Jan 2022, 21 minutes past 8 p.m. and we have a very strong high conviction move from the benchmark Nifty. I would first like to take a look at the 75-minute time frame, and let me remind you that this is where the trend reversed. If you remember this red box, which was this congestion, which did act as the immediate source of resistance for this move, and this was the most interesting part, wherein make or break kind of situation. We had a pretty strong first day of the Jan 22 expiry on Friday, and the market just carried it forward beautifully with double the momentum and buying pressure thanks to the banks in today's trade. What does this mean? Especially Friday and Monday's market behavior means that not only has the short-term trend reversed, but it reversed and immediately shown very good conviction. Yes, it is stretched. Yes, you might have felt left out participating in this bounce back, which is okay. I wouldn't say that you have to participate in each and every leg of the market, but in this particular leg, keeping in mind the correction that we had, even if you have not participated big time in this bounce back, it's okay, because now going forward, if the index and the sectors and stocks gives us opportunities, they should not be missed. Going back to the daily time frame, there's a very interesting and important level I would like to talk about. If you've been following my videos for some time, then you'll recall that back in the mid-November when we were making these videos, 650, 750 was an important level. Now, let me mark this importance for you. Let me try and show you why I say this is important. This range did act as a support down here and here. This was the breakdown, after which it didn't even look back. It was a straightaway move down. Then it bounced, which was the resistance. So previous supports had confirmed as resistances, which makes this level very, very important. Not to mention the fact that the point of control of this leg up is exactly at this level. So we've got a confluence from volumes, we've got a confluence from price lows and highs, and if I extend this a little like this on the right hand side, that's exactly where we are knocking. We had a great run, we had a pretty good bounce back, we had a pretty high momentum move for the last 2 trading sessions, and so as we knock at these resistances, it will be important for the index to slow down a little bit, consolidate these gains, and then break above this level. If you look at this moving average type looking red line, this is the anchored VWAP from the all-time high. Look how this anchored VWAP did act as a pretty good resistance here, and then a bit of here, then very close to a level here, and today it has taken that level beautifully. In fact, I was expecting that close to this 550, 600 level, the index might show some respect and slow down to the bears, but nothing like that at all happened in today's trade. I think this is primarily because of the participation we saw from the banking space, which matters. So as we knock the 650, 750 zone, which clearly has proven itself as pretty good, important, strong levels in the past, keeping in mind the bounce back that we've had now, it is not wrong to expect the market to slow down, at least for the next few sessions. This does not clearly immediately means that it's going to come down. That I don't know. That price will reflect. And if it does, even if it comes down, then this level that we have drawn here, which did act as a congestion, which did act as resistance, is definitely going to act as supports, which is a little below that 17,400 mark. The point of control of this bounce back based on volume profile comes to a little above 17,200. So 17,200 all the way towards 17,400 is a pretty good short-term support for the index going forward. Nifty's done well, and the great thing, not the good thing, the great thing is the bank Nifty has done very, very good for itself. 2.68% up. Nifty private banks almost 2.7%. Finance and PSU banks. This four sectors that I've just clicked, they matter to the market a lot, more than 40% of weightage. They are in a downtrend. They have not done as good as the Nifty per se, but now just they have started to pick up. It does not mean that you'll hurry, scurry and buy all the banks straight away. No, we are still dealing with a bounce back. We should remember that for sure. Coming back to the bank Nifty chart, the trend is still down on the daily time frame. It has definitely taken out short-term resistances and it's need to deal with higher levels on the upside. But the trend is still down on the daily time frame. On the anchored VWAP, it's dealing with the one standard deviation of the anchored VWAP at today's close. And today's high corroborates with the recent lows. So we should not get carried away by the fact that start of a new year was a bumper of a move and the entire year will be great and positive. Let's not make such whimsical assumptions. Let's play the price, and the price has shown strength. We respect it, and we would like to participate once we get better opportunities. And by better opportunities, I mean a short-term correction, I mean a drop in the daily range, and decent, strong stocks from relatively stronger sectors, which gives us breakout on the upside. Pharma was the only sole sector which was negative in today's trade. But if you recall, this bounce back was essentially triggered by the pharma first. Look at the bounce back. And it's created a very neat looking bearish engulfing pattern. Indicators will definitely suggest overbought conditions, and it should slow down a little bit. I can understand, and as it slows down, it will give us further opportunities to buy into them. Apart from that, all the sectors was positive. Apart from that, all the top stocks were positive. ICICI Bank, HDFC Bank, all of them had shown great strength. Going forward is the big deal. We have to see how the market sustains, whether it corrects, and whether the correction is just a mere 100-150 points, or would it correct all the way down to 17,200. That needs to be observed going forward. Remember, the beginning of the month of Jan always tends to find more participation as many international institutions join back to their offices and starts deploying their allocations. So Jan, we generally tend to see, at least the first half of Jan, some bit of momentum, and as of now it looks pretty well poised on the upside. So fingers crossed, if this continues, I think this month should give us multiple buying opportunities. Talking about opportunities, let's quickly check the scanner that we generally scan for ourselves. The InstaView scanners, we will run them on the Nifty 200, and let's see if we get any good opportunities for tomorrow. In the inside bar list, we have VBL, UBL, that rhymes, and Dixon, out of which Dixon stands out pretty good. Uptrend going through a short-term correction is all poised for a breakout, and the level, today's high, is around 55.73, so one can look at that. VBL, UBL, both are in a downtrend, both are consolidating after a bounce back. It's Dixon which is much well poised for the upside move. Bullish and bearish Rami pattern, UBL is also there, but it's not a very strong one. Definitely not NTPC, because bullish Rami pattern comes after a downtrend. This is a short-term uptrend. Sanofi has relatively pretty long range on Friday, and both the candles are relatively longer in size. Let's see if we can find any better pick than Sanofi. Oh, Nestle has finally given us a move now. It's on the verge of a breakout. It should sustain. It's a pretty good long-term stock. So any kind of a short-term correction towards 19,500 is definitely a good opportunity. But I think Sanofi can be looked into, but neither of these bullish bearish Rami stocks in this scan looks that impressive. As of now, I think Dixon is our pick. Delivery percentage, 1 lakh shares minimum to be delivered with 70% delivery percentage number within the Nifty 200 gives us two stocks, Natco Pharma and REC. Natco has given a breakout. It has taken out its previous swing highs with pretty good momentum in today's trade. It started to create some divergences with RSI down here. Doesn't make sense to chase a stock when it is on a strong uptrend and then starts to pick up high delivery percentage. I personally find it's much better to look into high delivery percentage when a good quality stock is actually correcting in a corrective mode. REC on the other hand is definitely buying time. We can see that after this correction, it has gone into a range. It is consolidating this correction. Weekly chart reflects that. It's a short-term bounce back and some bit of delivery percentage, 70% for the stock. In the last 9-10 days, if you notice, especially for REC, there's no impressive delivery percentage number, 50s and 30s and 40s. So let's not jump into either of them. So REC is something we can continue to observe, but none of them stands out. Breakout. Havels, yes, because it's in typical behavior where it is dealing with resistance. Breakout traders will like to trade these kind of picks. Apart from Havels, the others, as I click through them, Trent also looks prospective, 1070. It's a typical breakout candidate. Biocon, I think I've been observing since yesterday, as in after Friday's close, very clearly 367.5, 367, 367.5 is the typical 3-day high for Biocon. Pharma didn't do that great today, so the stock could not manage to perform, but 367.5, you should put an alert. And who knows, you can get a good high momentum move once it breaks out. Dixon, we have spoken about some time back. Procter & Gamble, not the best of liquid stocks, very relatively illiquid counter. Few thousand shares only gets traded. But it has created a pennant symmetrical triangular kind of a pattern, as you notice here after this big move. So it is consolidating, and yes, ideal for long-term cash market portfolio play, where you need a lot of patience. But Procter, yes, on the verge of a breakout above 15,650, and IGL, no, this is definitely not a breakout candidate. Oracle long and Oracle short primarily focuses on short-term intraday movements for the next day. Godrej Industries looks decent. HDFC Life I'm going to ignore because it has come in both of them. At times we get this. VBL, no. So Godrej Industries amongst the Oracle long, and amongst the short, which I wouldn't suggest to go for in this market condition unless we have enough evidences to do that. I wouldn't say any of these stocks look so good. So Dixon definitely amongst the inside bar. Amongst the breakout, we had Dixon and we had Procter & Gamble, we had Biocon also. And amongst the Oracle long, it will be interesting to observe how Godrej Industries play out in tomorrow's session. So overall, a good start to the year, the week and the month. We already had a good start to the expiry of Jan on Friday. Let's not get too carried away by this early gains and momentum. Let's see how it deals with 650, 750. Strategically, now let's start to also look into buying opportunities on a short-term correction, especially from the stronger sectors and stocks. The index needs to fall more than 400, 450 points from the current price to disappoint this move. Generally, when the markets are in a bear trend, in a downtrend, bounce backs should not be this steep. bounce backs are shallow. The fact that we have a pretty good, well-sized bounce back with participation from various sectors proves a point that it is more than a bear market bounce back, or should I use the term, it is more than a bounce back in a downtrend. And so let's keep an open bias to the market, both on the long as well as the short side. And because the momentum is definitely proven on the upside, I think it makes sense to look for more of buying opportunities going forward. But there's no need to hurry because the market's done quite a bit in the first 2 days of this expiry. So wait out and go for those trades when the setup is ready and you have high confidence and conviction. So there it is. Thank you for listening me out. I hope that this year turns out to be phenomenal for you, both in terms of your health and wealth. And I'll do my best to keep you updated as much as I can in terms of my views on the Indian equity markets. Thank you. Take care of yourselves. Trade well and trade wise.